administration of taxation. Then I moved to the income tax, especially income tax. Most probably, most of you might have interested about income tax because some of you might have registered for the purpose of filing of your tax returns and the area of taxes you are paying taxes, especially the direct tax for regime. And I'm moved to the employment income where most of us, so we earn employment. Some of us maybe doing business, but I'm not going to discuss business income calculation and all because you know it is a bit complicated and very technical, so it takes long time. Because of the time being, I just emphasize employment and investment income, where most of us are having the two type of receipts. Then little bit of calculation, then tax administration, especially I try to provide you the details of how to get registered, how to get opening your tax file in the Inland Revenue. Then at last, so we will have a Q&A session. So any doubts, any clarifications you can raise during that period. Or even during the session, if you don't understand properly, please please don't hesitate to stop me, so you can ask questions. Right. So first, moving to the first topic, IRD, the IRD tax and contribution. So they are, you know, when you take the taxes, you can divide into taxes into two segments. Segment 1 direct tax and the segment 2 indirect tax. Direct tax means directly paid by the payer. For example, income tax, surcharge, economic service charge, namely those are the direct tax. Actually, the person who really pays the tax, person who really bears the cost of the tax. So if I pay income tax, so I'm taking the full burden of tax liability of mine. So that is what we call direct tax. And indirect tax, especially sometimes it depends in the application. Indirect tax, basically we interpret the indirect tax. So person who really pays the tax is not the person who really bears the cost of the tax. Actually, on behalf of the department, you collect taxes and you pay that tax to the IRD, Inland Revenue Department, namely the VAT, value-added tax, nation buildings tax, and stamp duty. But today, according to the present administration, so we only administrate VAT and stamp duty, but you know, in the 2020, the nation building tax was abolished, and economic service charge also abolished. These two taxes were abolished. The surcharge tax is one-off tax. It was introduced in 2022, since the pandemic and some issues related with the government issues. But most probably from 1st of July 2022, there would be another new indirect tax type of, but it is almost like our what do you call nation building tax. So it is SSC, Social Security Contribution. So it has already, I mean, the bill has already been published, and it is in the website, and it is in the parliament now. So it is 2.5% sales tax, 2.5% in the sense with the turnover you have to pay 2.5%. So that tax will be introduced. It is indirect tax. Directly, indirectly, it will be going to be administered. Right. So let me just brief about our contribution and IRD contribution to the government revenue. Actually, you can see here, Inland Revenue contribution to the tax, total government revenue. I mean the total government tax revenue. So our contribution was 523 billion in 2020. But when you compare with the previous previous collection, it is 501, 385 million decrease. In 2019, department collected more than 1 trillion of 1 trillion rupees as tax revenue, but in 2020, so we collected only 523. So there are a lot of reasons behind this. One is the decisions taken by the government. Most of the taxes has been abolished, like economic service charge, NBT, and VAT. Also, the rate initially the rate was 15% in 2019, but in 2020 it has been reduced up to 8%, and also raised what do you call the VAT registration threshold also decreased from threshold also increased from 3 million to 75 million per quarter. So a lot of registered taxpayers were quit from the system. So, and the collection of VAT and income tax both dropped nearly 38%. 38% comparing to the 2019 collection. At the same time, so it is when you take the contribution to the GDP, it is 3.5, very small amount in the 2020. Now you can see here the difference of 2018, 2019, and 2020. So you can see here in this chart here. So the IT collection, the blue line indicates 2019 collection income tax. So here income tax collection in 2020. So almost all the taxes dropped drastically. So even VAT become half of the collection of the previous, comparing to the previous year. So this is the contribution actually in 2019, our contribution to the GDP, but this is inland revenue contribution. It's around 12.5 tax revenue contribution to the in terms of the total tax contribution to the GDP. You know what is total tax? Total tax means so IRD, and there are certain other institutions that institutions also collected tax, namely Excise Department, Customs, provincial councils, RMV. So they also collect the amount of tax on behalf of the government. So total contribution of the tax revenue to the government GDP in Sri Lanka in 2019, it's around 12.5, but it drops around 8.9 in 2020. So the main reason behind this, I think it is abolishment of most of the taxes, and at the same time, so you know that we had a pandemic situation during 2020, 20 and 21 also. Right. So this is when you take the tax contribution to the Asian region, you can see Asian low income countries also contributed around 15%, 8. But when you take OECD countries, OECD countries is like developed, you can call developed countries, but developed countries contribution to the GDP and tax revenue, you can see here it is around 35%. So when you compare with the Sri Lankan situation, so it is around 8.6 or 9% around that in 2020. Okay, now so this is a little bit of income tax introduction. So I'm not going to detail. So we can so in the Q&A session we can discuss if you want anything else. So we can discuss there. So let me go to straight away to the income tax, because it is important to understand income tax. So I am not going to discuss other taxes like VAT, value-added tax, or other type of tax. But if you have any queries, you can raise. More focus is given to the income tax in this lecture session. Now, income tax. So we administrate the statute that we use to administrate income tax. It is number 24 2017. So this is the principal enactment. Now it was amended by number 10 of 2021. Certain amendments introduced in 2020, amendments also introduced through 2021 amended act. So especially the rates, certain areas were what do you call change. So that changes introduced through amended act number 10 of 2021. So this is the principal enactment. Before this income tax act, we had previously we had the statute that we used to administrate income tax. We use number 10 of 2006. That total so that act totally repealed and so this is a very new act, and previously it is principle based act, but in this act, so it is rule based, is converted to the rule based act. So this act, you know that IMF engagement. This is basically according to the instructions given by IMF. So this act was drafted, and so most of the concept they considered analyzing the situation in Sri Lanka, and so they have given the focus in the global tax applications as well. Now moving to the act, so let me come to the application of income tax act. So there are a lot of provisions in this act. You know, there are 303 provisions. I mean, in the act sections, actually section 203 sections in the new act. But so here it is impossible to discuss 203 provisions. But so there are in the when you take the statutory law, so you will find very important provisions there. So one of the important provision of the act, it is statute, is a chargeability. So who supposed to pay taxes? Who supposed to pay taxes? Now income tax supposed to pay by each and every person in Sri Lanka. So based on their taxable income, if a person receives a final withholding payment. So let me just brief you what is taxable income and what is final withholding. Difference of taxable income and final withholding payment, it is something like that. Now before that, let me just tell you what is person. Who is person actually? Person means, now generally, so if someone tells us person, so we know that it is general definition. Basically we call a person for individuals and all, but here for the purpose of this act, person means it's included individuals, entities, partnerships, companies, so everybody, right? So wherever you find the word called person in the act, in the income tax act, so it mentioned, so almost all the segment of community. So therefore so it is applicable for entire population. At the same time, it is applicable for the entities and companies as well, but it intentionally it tries to exclude Sri Lankan government. Sri Lankan government does not include as a person. Therefore, so anything highlighted here, so which is not applicable for Sri Lankan government, because Sri Lankan government tax exempt, and certain principles also not applicable for the government as well. Now, what is the difference of taxable income and final withholding payment? Now, certain receipts that we recognize as receipts of our part of our taxable income. Now, for example, now let's say our employment income. So if you received any employment income, that employment income we considered as a part and partial of our taxable income, right? Employment income, it's a part and partial of taxable income. So it is taxed by way of source by way of taxable income. It's a part of the taxable income. But there are certain receipts that we are getting that sources not considered recognized as our part of our taxable income, namely in 2000 in the Principal Act in 2018-19, namely interest from fixed deposit or interest from banks, interest from financial institutions, considered as final withholding payment in the hands of the individual. For example, if I am given interest by bank, and which is interest and the name called interest, then it is considered as a final withholding payment. And by way of final withholding, so I have to pay tax. So what is the difference between these two? Now, if anything that comes as final withholding payment, so it doesn't matter how much I am getting, or it doesn't matter what is my tax-free allowance. So now you know what tax-free allowance. Now, certain limit is there to make your tax payment. Now, for example, in the individual capacity, if you want to open a tax file, or if you want to recognize you as a taxpayer, you have to have, in the Principal Act, you have to have more than 500,000 income. 500,000 income. If you exceed 500,000, then only you have to pay taxes, and you are forced to register for the purpose of tax, opening a tax file. But that has been changed. That 500,000 has been changed to 3 million, right, in 2020 onwards. So our tax threshold, in other words, the personal relief, that means if I have more than 3 million, 3 million only, I need to pay tax. 3 million, that is 3 million, that is 30 lakhs. If I have 30 lakhs, more than 30 lakhs only, I need to open a tax file. But final withholding payment, it is not like that. So whatever the amount that you go and deposit in a bank, it doesn't matter how much you are getting at the end of the day. I mean, at the end of the year of assessment, maybe at the end of the year. So what is your income? It doesn't matter to the bank, right? Maybe you are having only, let's say, 100,000, but still bank will deduct 5% from your 100,000. So that is the difference. If anything that you received as a final withholding payment, that is at the point of receipt, so tax will be deducted by the payer. In other words, we call withholding agent. So withholding agents once deduct taxes, so it is considered as final withholding payment. So this is basically, you have to understand. But in 2000, from 2020 onwards, this concept of final withholding payment, most of the areas has been removed. And not only the final withholding payment, other application of withholding tax also, they have changed. Now, for example, interest now after 2020, it is not considered as a final withholding payment, and it is not considered as for the purpose of withholding tax. Now, in other words, your withholding agent as a bank will not deduct withholding tax from your interest payments, right? Now, it is a part of your taxable income. Now it goes to your taxable income. Now it is not in the second criteria. It is fallen in the category of first criteria. That means it is as employment income, as business income. So it also considered as a part of your assessable or taxable income, right? So then if you are exceeding the threshold, that means if your entire income is more than 3 million, so you're supposed to pay taxes. So that is basically we call chargeability of the income tax of the person, and you need to pay taxes basically for the year of assessment. What is year of assessment? Year of assessment starts with the 1st April of the year, and it is end up with the 31st March of the subsequent year. Now, for example, now we are in 2023-23 year of assessment. 22-23 year of assessment starts with 1st April 2022 and it is ends up with 31st March 2023. So then the difference between taxable income and assessable income. So there is another provision that important to understand. Taxable income and assessable income. Basically, assessable income is a little bit broader than when you compare with the taxable income. Actually, assessable income, so it is broader picture, right? But taxable income, it is little bit smaller than the assessable income. So you pay taxes based on your taxable income. So entire circle is the assessable income, and the taxable income will be the small part. So certain amounts that you can remove when calculating the assessable income. Let me just brief you with the example. Now, assessable income should be calculated based on your receipts like employment, business, and investment. There are other sources as well, but we considered three sources: the employment, business, and investment. Now, whatever you are getting, whatever income that you are getting, that considered as identified according to the source of receipt. Now, for example, if you're providing services, then as an employment capacity, that income considered as employment income. If you do the business, that income considered as business. If you invest in a certain investment like investment in shares, maybe investment in banks, investment in treasury bills, so the receipts considered as investment returns. Now, when calculating the assessable income, so you have to calculate in the broader manner. I mean, so all the expenditure related with that income could be deductible. Now, for example, first let me go to the assessable income. So first, now let me brief with business. If you are a business person, so let's you know that the accounting, according to the accounting principles, so we calculate the sales. We calculate the sales, then cost of goods sales. So then after that we call gross profit. We considered gross profit. From gross profit, you deduct certain deductions like water bills, salaries paid to employees, maybe electricity, telephone, and all. After deducting all these items, so end of the day, you get net profit. So that is according to the accounting standards. But for the tax purpose, almost this net profit and net profit and assessable income will maybe, but not synonymous, but a little bit maybe the difference may be there. But so according to the act, each and every source, now employment, business, and investment should be calculated according to the relevant section. Now, for example, say employment income should be calculated using section 5. Business income should be calculated using section 6, and investment using section 7. Now, when you calculate the income, so section 6, now here the business, as a business person, so you have to include all the sales figures, all the receipts, actually receipts of the business first, and then after that you can take the deductions like this type of deductions. All these deductions are available to deduct, but these deductions should be in line with this provision that mentioned text section 10 to 19. Then after applying the provisions properly, so you find assessable income. Now let me brief you what is the difference of net profit and here. Now, for example, when you deduct here according to your deductions, assume you have a deduction of donation. You have donated during the year to the government, maybe some other sector, maybe a donation made to the rural village or something. So whatever, but it is a donation, it is a type of outgoing. This is a type of your incurred deduction. It is type of expenditure. Now this expenditure, for the purpose of accounting, you can claim as a deductible expenditure. However, when it comes to the taxation, it is not available as a deductible expenditure for you to calculate assessable income. When you calculate the assessable income, it will not available to you to deduct it. So there may be, so I'm not going to discuss all the deductions, rule of deductions, but for your understanding, I will provide you calculation example as well, then you will understand. But here you just better understand the deductions should be in line with the statutory provisions of Inland Revenue. So once it deducted, then after deductions, so you come to the assessable income. Now this assessable income, you have to calculate, as I mentioned previously, you have to calculate according to the source wise. Now there are three sources: employment, business, and investment. But remember, it is very sad to say, when you calculate the employment income, there's no deduction available. So in the first provision of the deduction rule says, when calculating the employment income, deductions are not allowed. Deductions are not allowed. Therefore, employment income calculation, so you can't take any deductions. That means whatever you received end of the day through employment, it will be your assessable income. But business and investment, if you invest in a bank and you get interest income, so anything related to that interest, you can deduct. But previously it was not available under previous act, but under new act it is available. For example, if you have if you invest in shares, now for example, if you invest in shares and you earn dividend income, from that dividend income, so now that investment, assume that investment that you made by borrowing funds, using borrowing funds, that borrowing funds you paid interest expenditure, that interest expenditure you can claim when calculating the dividend assessable income from the dividend. So something like that. So there's no that much of restrictions under as previous act used. This act, it is a bit liberal, or you can claim that expenditure at the end of the day, so you come to the assessable income. Now so these are the deductions. So this is the formula I have already explained. Now importantly, because employment income, I told you that there is no deductions, but from the employees also, there may be you may have some type of deductions. Here I just want to highlight the assessable income to taxable income, because taxable income is the amount that we use for the payment of tax. Now assessable income, after assessable income, there were special consideration to deduct from your assessable incomes. Special deductions is available for you to deduct from your assessable income. For example, now I have mentioned tax-free allowance. Tax-free allowance we call personal relief, and in other words we call threshold, tax threshold, income tax threshold for individuals. Tax-free allowance is a part of the deduction from your assessable income. It is an item of your deduction from your assessable income. Assessable income I have explained. Now from the assessable income you can deduct tax-free allowance. That is at present in Sri Lanka it is 3 million. Right. Now in addition to that, there were some other deductions as well. One is qualifying payments, the other one, the relief. Now, qualifying payments, that means if you, so basically it is donations, donation made to the government and donation made to the approved charitable institutions. Remember that donation, to claim these qualifying payments, the donations, so there are special, the conditions are there, but department will check the conditions and department will by end of the day decide whether it is available or not. But according to the the provisions, so there were certain recognition is given for the qualifying payments as well. Qualifying payments means especially donation made to certain institutions, certain charities and certain public sector institutions as well. The reliefs, remember, reliefs are available only in the hands of the individual. This reliefs basically 3 million threshold, that is also kind of relief. In addition to that, there were several other relief. After deducting this relief, so you will derive your taxable income, where you apply the tax rate on taxable income. Right. So these are the qualifying payments. Donation made to the approved charity. Donation made to the approved charity. 1/3 of the donation or 75,000. Donation made to the government, 100% you can claim. 100% you can claim. Now, for example, if you donated to the government institution or maybe school, so you can claim without restriction total entire deduction as a qualifying payment. But charitable institution donation, maximum charitable institution donation, you can claim 75,000. So these are the reliefs. Personal relief, I have mentioned, that is from 2020 onwards. So it is 3 million. Previously, before 2020, it was 500,000. So that is how we taxed on the previous act, but now it is 3 million. In addition to that, rent relief, that is again rent relief means if you have building or land or building you given for rent, and from that rent you can claim 25% as repair expenditure irrespectively of the expenditure made. That means if you incurred this expenditure or not, if you spend it or not, 25% from your rent you can deduct relief. You can take a additional relief. In addition to these two relief, in 2020, government introduced a special relief that is called expenditure relief. So expenditure incurred in this area, so it you can claim as a expenditure relief. Now, for example, if health and medical insurance or health expenditure, educational expenditure, including the children, interest paid to housing loan, contribution made to approved pension scheme, expenditure in purchase of equity or securities. That means treasury bills, shares, so purchase of shares. So you can claim this expenditure relief. However, remember the maximum relief is available 1.2 million. Maximum you can obtain 1.2 million. So to claim relief, remember, to claim relief, you have to have documentary evidence. Otherwise, so you are not in a position to claim relief. So lastly, another relief were introduced from 2020-21, which is related to the solar panel, fixing of solar panel in your premises. So you can claim 600,000 relief. So altogether you can see 4.2 million plus another 600,000. It's almost like 4.8 million relief is available Sri Lanka. That means if your income, if your assessable income is less than 4.8, you need not to pay taxes, but you have to have this to claim these two relief, you have to have documentary evidence. So without documentary evidence, you cannot claim this relief, but still, so it's a huge amount, 48 lakhs. But when so I take you to think, I mean, for you, the threshold limit in other countries, especially the South Asian countries. Now you can see in India. So this is Sri Lankan rupees. I converted their threshold in Sri Lankan rupees. That is 2.3 million. Bangladesh 1.2 million. Nepal 1.4 million. Pakistan 1 million. So all other countries, you can see here, so how their threshold looks like, and our is it's around 3 million. That means 30 lakhs. And also, so when you see our tax rate, our individual tax rate is 6%. First 3 million tax at the rate of first 3 million tax at the rate of 6%. This is 3 million. Next 3 million tax at the rate of 12%, and maximum rate in Sri Lanka at present is 18%. That means balance will be taxed at the rate of 18%. But in you can see India, their individual tax rate, the maximum rate is 25. Bangladesh also similar. Nepal it is 35%. Pakistan it is 36%. So this is our present situation at present. So this is the tax application, tax rate application. Our threshold 3 million, and tax rates. The first 3 million tax at 6%, then 12% and 18%. And according to now the present changes, now proposed cabinet, in the cabinet paper, this is still not passed in the parliament, but it has been passed by the cabinet. According to this proposal, so it is proposed to reduce this threshold in Sri Lanka from 3 million to 1.8 million from 1st October 2022. So so you will see, but still it is not passed, but it is proposed and cabinet decision has been taken. So the threshold will be 1.8 million from that date. And our now and according to the proposal, so maximum rate will be 32%, and the tax slabs application will be applied on this basis: 1.24%, 1.28%, 1.12%, 16%, 20%, 24%, and 28%. So that is how the proposal introduced. Now let me go to the because this is in this forum, I think there are a lot of employees, and employment income will be the most significant. Therefore, let me just brief you the taxation of employment income, how to tax employment receipts. So, and it is important to you to understand what are the things that we have to recognize when calculating the employment income. Right. Now, first, what is employment? Employment, the meaning is given in this way. Now, they are, when you, so this is this certainly in this, so we had participated a lot of seminars during 2018 and 19, and we have participated universities and certain institutions like higher education institutions. So what we understood, so a lot of places we came across certain applications, especially the identification of person, whether it's employment income or whether it is service income. So that is very important you to understand. If you are in charge of the division, so you should understand what is the difference between employment and the services. Now, employment, now when you take, it's a kind of services. Now, services in the sense, if the services we can categorize into two segments. One is independent, the other one dependent. Now, independent services, uh, basically, sorry, yeah, let's talk about the dependent services. So what is dependent services? Dependent services means we provide our service depending on somebody else. Now, for example, if you take me as example, I am depending on the government. I am a government employee, so I am depending on government. So I provide my services depending on government. So that is employment income. So uh, if the person depending on someone else and providing services, that is basically we call employment. So that this is employment income. But independently, if any person provides services independent capacity, so independent capacity, then that person not provide employment, that income fallen for that person is business. It is business, right? So that is how we identified whether the person uh, providing services by way of depending on somebody or someone else or independent. That is the challenge. That is a challenge. To identify that, you have, there are certain test tools, but importantly, this very simple format. So we identified the employment, because employee and employer, there may be master servant relationship, so they have a mutual obligation for each of each other. Now, for example, employer has the obligations and employee also having the obligations. Where when you take the independent person, so you don't find that type of obligations. And also periodicity of payment. Now, if you are paid periodically, maybe monthly or bi-monthly or maybe weekly, so but periodicity is maintained, it shows that there is a relationship between employer and the person. And most importantly, the contract of employment. So the in addition to this, there may be the equipment and some other tools also used for the purpose of deciding employment or independent service provider. So sometimes people prefer to employment, sometimes people prefer the business, because if you consider as a business person, I mean independent person, so what will happen? So you have a couple of things that you can deduct, at least some expenditure related with your service you can deduct, but employment, so uh, it is not available. So therefore, people mostly they prefer to for the putting in the category of business. But so once the person identified as an employee, definitely, so employment income, it should be categorized as employment income. You have to calculate employment as it as a employment income. Now, what are the things that when you calculation of employment income, so what are the things should be recognized? So employment income, you have to calculate based on total receipts what you are getting from your employer, right? Now it is not only for the employer. So sometimes so some receipts comes to you not from your employer, but it not comes to your hand, but it goes to the third party. So for example, some insurance, now your life insurance or your motor vehicle insurance can be borne by employer, the burden of that amount, and the state without giving that amount to you, the employer can straight away they can contribute it to the your insurer. So it is basically third party payment on behalf of you, done by the employer on behalf of you. So that is basically we call that is also employment, the part of your employment income. In addition to that, sometimes the tips given to the employees. For example, tips we pay to the waiters, and maybe tips goes to the certain service providers. But if that tips comes to that service provider because of the employment, that tips also considered as employment. Now, according to the employment categorization, So even so maybe consideration for the tips sometimes it may be based on your obedient service, maybe of your um, excellent service, but the reason behind your tips, that is how the categorization is done. It is basically uh, it is for the purpose of uh, because of the consideration, reason behind is because of your employment. Therefore, narration does not matter. So what is the narration? Whatever that income in the hands of the employee considered as employment income for the purpose of taxation. So you have to understand in that way. Right. Now, when it comes to the employment income, so employment income again, so we can divide into two segments. One is cash benefit, the other one is non-cash benefit. So cash benefit is very easy to quantify. So if anything that comes to you by way of cash, so it quantification, you don't have any issues. But non-cash benefits, so there may be quantification issues. They are when you calculate it, you have to take market value, or you can go for the certain amounts. Quantification is provided by the Commissioner General, so you can go for the specifications of the CGIR, Commissioner General of Inland Revenue. Now, for example, let me take example benefit in by non-cash benefit. Now, for example, housing benefit, right? So your employer provide you a rent-free house or totally free house. So that is a kind of non-cash benefit. And also vehicle, or sometimes concessionary terms loans, telephone allowances, telephone bills paid by the employer. So certain non-cash benefits, but telephone bills paid, we can take the amount is quantifiable. That means amount will be available, but sometimes certain entertainment type of things also could be done by your employer. So, but remember, so it is everything together. We have to take employment income. Right. Employment income, basically, employment income previously, before 2020. Employee, I mean, in that before 2020, the burden of the payment of tax and burden of calculation, I think there won't be issue, because at that time based on the employment income, tax payment should be made by the employer. That is how the previously burden transferred to the employer. But in 2020, the government take a decision to abolish all the withholding tax area. Therefore, they decided to abolish that. Therefore, now the responsibility for the payment of tax is not fallen with the employer, it is with the employee. Now the tax payment burden with the employee. However, if you're willing to provide your consent to your employer, you can ask your employer to deduct on behalf of you your tax, and you can remit it to the CGIR in the hands of your employer. Now, to that, the system has been introduced. That system we call advanced personal income tax. But advanced personal income tax, if you are in charge of that division, so advanced personal income tax is not compulsory. It is not compulsory for the what do you call to the employer. It is what do you call the if you obtain the consent from your employee only, so you can go for the advanced personal income tax. So if you are given a consent by your employee, then so you have to apply this APIT tables accordingly. So these are the APIT tables that define the department. So according to this APIT table, there are 7 tables were introduced based on the items that you receive. They're based on the payments that you pay to your employees. So you have to select the proper table. I'm not going to introduce the table, so it is a totally maybe the very vast area. But so all the elements, I mean, all the calculation details you can find from the department website. So department website, that means if you are really interested, you can go for the Inland Revenue, you can Google it, Inland Revenue Sri Lanka, and you can go for the Inland Revenue website. So in the Inland Revenue website, all the details have been published, and the guidelines also you can find in the department in the Inland Revenue website. So therefore, if you really interested in tax field, so you can you better get familiar with the department website and try to take the details from the website. So so this is just employment income. Then investment income. Investment, that means now if anything comes to you out of the employment income, and if you are not doing a business, then all the receipts can be considered as investment income. Basically, investment income means so while keeping your asset, for example, fixed deposits, maybe what you call share investments, or maybe sometimes treasury bills. A lot of things you can consider as and sometimes you are given your building or lands or rental, so you are getting rent income. So all these considered as investment type of receipts. Now, namely investment, dividend, interest, discounts. Then, in addition to that, very interesting and very important thing that you have to understand. So, realization of gains from investment asset. Now, this is actually land and building. If you dispose your land or building previously according to the previous act, now we call this capital gain tax. This is capital gain tax. Previously, sorry, CG, capital gain tax. Previously, up to 2018, if you dispose your land or if you dispose your building, so it considered as a capital gain, and it has been made exempt. So no tax should paid on that income. But from 2018 at present, that means, so if you dispose any land or building, especially this applicable for land or building, so land or building, so it will be considered as capital gains. The gains will if you end up with the gain, then you have to pay 10% tax on your capital gains, right? So that is also you have to make sure, you have to remember. So it was previously, it was not there. And now other than that, winning lotteries also, if you're winning any lottery, if you want win any lottery winning, then that also subjected to tax. But now this element, this item, considered as still this in the principal act, this item also final withholding payment. Now also this is final withholding payment, and withholding tax will be 14% on your winnings, lottery winnings. So these are the things that investment that we basically we received, and your land and land disposal, land or the building capital asset disposal should be calculated according to this formula. So and but remember, don't get confused, and don't worry, your permanent place of residence is not taxable, and the gain gain is less than 50,000 also not taxable. Therefore there are kind of exemptions. Our permanent place of residence, if you dispose and if you earn any gain, end up with any gain, so it is not liable for tax. And also income from Colombo Stock Exchange, investment in shares in CSE, it is not liable for tax, right? Then the calculation, I just now I have explained you certain source, and I have explained investment receipts. I have explained the employment receipts. Now we move and the taxable income and assessable income. Now let me go to the calculation example. Now here, so this is a small example. Mr. Kumar is employee in ABC Limited, and his income and expenditure for 21-22 as follows. PIT has not been deducted by the company. That means he not provided consent. He not asked their employer to deduct taxes. Now these are the income that he derived during year of assessment 21-22. Now 21-22 also, this is important. Those who are I mean already, if you have a tax file with you, so it is important for you to and understand the calculation of your tax liability. So this is the cash benefit from the employment. This is non-cash benefit, as I mentioned. This is interest from treasury bills, fixed deposit interest, dividend income from out of the dividend, and this is we call pass-through dividends. So that 40,000. So these are the income amount of income that he received, Mr. Kumar. In addition to that, these are the expenditure that he incurred. Expenditure during the year, he purchased treasury bills, spending 300,000. His medical bills paid 120,000. Medical bills of his spouse paid 150,000. Daughter's tuition fee Sri Lanka 200,000. Son's university admission fee Malaysia 600,000. Housing loan interest. So all these actually you have to understand. In addition to the personal relief, all these related with the expenditure relief. So when you take expenditure relief, so you have to see whether this is available as a deductible expenditure. Now, for example, here this 300,000 treasury bills you can enjoy as a deductible expenditure. Medical bills paid, his medical bills you can deduct. Medical bills of spouse. So spouse medical bills not deductible as expenditure relief, because for the taxation purpose, we take husband and wife separate people. Therefore, wife's medical bills cannot be deducted by the husband. Then daughter's tuition fee in Sri Lanka deductible, but fees goes to the Malaysia, because the payment should go to Sri Lankan Institute. Therefore, the 600,000 is not available. Housing loan interest is available. Then medical equipment donation to the government. Yes, it is a qualifying payment. It is not expenditure relief. It is qualifying payment. As I mentioned, if you donate to the government, it is a deductible expenditure. Money donation to the approved charity 100,000. So that is deductible, but conditions apply. And tax installment, by way of installment, he paid tax 396,000. Now, according to this computation, I think it is bit, complicated, but so you can understand. So the income, all the income of Mr. Kumar, so we considered as here. So that is his employment income, cash benefit and non-cash benefit. Then the interest interest from treasury bills, dividend, but only one dividend is liable for tax. You know, pass-through dividend. Pass-through dividend means one company A distribute to company B, and company B distribute to individual person. So this dividend is exempt from tax. It is tax exempt source. So this is not deductible. So end of the day, so your entire income 860 from investment. So assessable income, as I mentioned here. So assessable income of the person is 9.460. Sorry, of the assessable income. Here you can see 9,460,000. Then deductions from the assessable income, As I mentioned, qualifying payment, government donation 50,000, charitable institution donation. He made 100,000, but I have told you, so only he can enjoy 75,000 maximum. So 75,000 altogether. Qualifying payment 125. So expenditure relief. What I may have include 300,000 of treasury bills, medical insurance, sorry, medical bills paid, uh, daughter's tuition fee 200,000 and 400,000 interest paid on loan. So in addition to that, you cannot claim. So upper limit 1.2, but it is well within the limit, that is 1,020,000. So altogether he has relief, personal relief including 3 million. So end of the day, the taxable income will be 5,315,000, and that 5,315,000 will be taxed according to the rates. I have explained you the rates. So according to that rate, this 5 million, this will be taxed. First 3 million 6%, then the balance 2,315,000, because there is no additional 3 million, so will be taxed at 12%. So this is just a calculation. I just put in this slide to understand you. I think if you go, once you go through these slides, I think you can easily understand the calculation. So after this, after this presentation, so I send this to the organizers, and from the organizers, if you are interested, you can ask to you can get it from your organizers. This calculation, I think, so I just try to provide you uh, just idea how to deal with the calculation. In addition to that, I have included some more things to the Kumara's income. In the previous slide, according to the previous example one, so same Kumara, but in this calculation, I include some business receipts as well: agriculture, trading business, investment asset, dealing of investment asset like capital gain, and there's additional amounts paid. And I'm not going to elaborate this, but just for the time being, but that calculation also there. So you can first you understand the first calculation, then you can go to and you can figure out what are the details, what are the things that you have to identify. You can easily identify the calculations of the tax liability. But I'm not here to discuss all the calculation details, but for at a glance you can understand what are the taxes are available at right now. Sorry, as an individual person, what are the how your tax calculation or tax will be calculated. Now moving to the administration. In the tax administration, so I introduce you how to open if you are above the threshold. So if you want to now, so once from 2022, October 2022, once the government reduced the threshold limit from 3 million to 1.8 million, definitely this slide will be useful for you. So once, if you want to get registered, so you can get registered using the manual registration process, and you can follow the online registration process. So online process also very easy. You just upload your identity card and the income details with the going to the e-service of the department e-service, and so you submit to the documents to the department, and so then department will send you the registration number. And so after registration, so you have to obtain another type of registration, that means tax type of. First you have to obtain a TIN number. So here the path is given in this online registration path. So each and every stage it is described here, and the contact details also included. So you can get registered for the online registration to obtain a TIN number. That means TIN number means taxpayer identification number. So once you obtain taxpayer identification number, so you have to again you have to submit. You have to ask what you call in the department to register for the what are the tax types that you are liable. So that tax type registration also you can make a request to activate your tax type registration. So then you will be given the status. Now here the path each so this guideline I downloaded from the department website. So you can find lot of materials in the department website as well. So how to obtain how to get registered to the taxes and taxes in relation to the so registration of TIN and registration of tax type. So at last, so I'm going to give you because this is also very important. I also have some friends in the universities and certain institutions. Still, they are struggling when it comes to the payment of tax, and there are a lot of issues related with with them, because they don't know how should your tax payment made, how should your tax payment should be made, right? Now for example, now people now let's say you are a taxpayer and you are having a tax file in the department. You open a tax file in the department, and during year of assessment 22-23, so your tax liability 100,000, right? After calculation your tax liability, so your tax liability is 100,000. Okay, so your tax liability is 100,000, and you stay last moment, and at the end of the day, most of you pay this tax liability on 2023. So this date is the last date that you are having to the payment. However, so this should not be the way that you have to make the payment. Now, to do this payment, so what you have to do, each and every quarter. Now, this is the due date for 2000. This is 21-22. Now we are in 22-23. So, sorry, 22-23 due dates to 15th August, 15th November, 15th February, 15th May. So 1/4 of this, that means 25,000. So you have to pay each quarter during this year of assessment. Now remember that is very important. So if not, so what will happen? End of the day, your tax liability become 100,000 when the system try to find installment payment. If your installment payment 0, but you paid at the end of the last date of the payment due date, that means 30th September, so 100,000, but based on this amount, your failure of complying the statute, I mean your failure to submit remit your tax payment on due date each and every month, so you have to pay 1.5% interest. That means for the entire period, the year, so 18% interest you have to pay based on this 100,000. Therefore, so remember that so your responsibility to pay your tax by way of quarterly installment. Otherwise, even though, but in case now you paid 25%, and maybe you paid 90,000 by way of installment, but 10,000 is available. Then 10,000 you paid this date. So then you are in line. So you are not applied penal provisions. But remember, so the I have not explained properly this what we call so it is also takes time, but by way of installment, because you have to submit the return as a, first you have to estimate your tax liability from the beginning. Before 15th August 2022, you have to estimate what is your tax liability would look like. So based on that amount that you have to make the payment. But basically understand your mostly our employment income and interest income in the beginning of the year of assessment. We know if you have deposit in the bank, you know that how much you are getting end of the year of assessment in the end of the year. And at the same time, employment income also roughly we can make an estimation. So based on that, you have to make the payment, so quarterly payment. Otherwise, the interest will be accumulated on your payable balance. Now, this interest, remember previously this type of interest was not there according to the previous act. According to that act, we had only 2% penalty each month, but penalty, Commissioner General has the powers to, if the Commissioner General sees that it is unreasonable to apply the penalty for this taxpayer. So Commissioner General can decide, because discretionary power was there to the Commissioner General to waive off the penalty. But the interest, even Commissioner General, even Minister not has not the power. They don't have the power to waive off this interest if it is if you not you but entire country, if you want to waive off this interest, so you have to obtain approval from the parliament. So that means another legislation should be passed through the parliament to waive off the penalty. Otherwise, sorry, waive off this interest. But in a penalty, as usual, it is Commissioner General still they're having the right to waive off penalty, but interest under the new act, so it is not available. Even Commissioner General is helpless, so to cannot do not can do nothing, can do nothing. Right. So these are the dates of the payment, and all the details I have given here. Date of payments, income tax quarterly installment payment, uh, and the mechanism of what do you call opening a tax file. Uh, so that's it. So this is what I plan to present, because you know it is 2 hours. Tax is a type of it's a very huge, vast area of subject. So I try my best to give something to do. At least you know, as a taxpayer, tax file holder, if you know how to fill your tax in proper tax return. And how to make tax payment in proper manner. So I try my best to communicate in that area, and what are the changes going to be occurred, especially the threshold level will be bring down by the government from 1st October. And uh, as I understood, I think when you compare with the region, so we are the top. I mean, we just ignore some revenue aspects in relation to the tax from application of taxes, because we you know that we don't have escalated resources, so we are only depending on certain small resources and small income, and so main income from of the country, of the government, is tax revenue. So if you ignore the tax revenue, I don't think it's a good decision. But it's a controversial topic because justification were there when at the time of introduction of certain policies, it was justified through certain economic principles. However, I think, as my personal understanding, we are, you know, we don't have that type of systems in country, so we are very lacking of resources, and lacking of even we don't have a proper mechanism of monitoring mechanism. To be honest, I accept that. Therefore, still we don't have that the IT that skills and that the facilities available in public sector organization. So I think it's a to take before you are taking the decision, you have to think twice. To if you want to change something, so you have to think twice. Right. So this is that's it. That is my today's plan. I here I'm stop my presentation. Now time for you for asking over to you. I mean the organizers to ask the questions. Right.
Thank you very much, Mr. Pradeep Silva, for that very illustrative presentation. I was listening from every word. Thank you so much. Can we take any students from the audience? Or because we have about 10 more minutes to go for the about the taxation institution of and the job opportunities mainly targeting the students. Any more any questions from the audience? We can take about 2 questions only because we are already 8:30, 8:28. There's a question from Professor Alas.
Yes.
Go ahead.
Go ahead, sir.
Thank you. I'm Professor Alas from Faculty of Medicine. Actually, I have a couple of questions anyway. The first questions relate to the that you saw. I mean, the return of the income. I mean, the related to the first example you given to. I mean, related to Mr. Kumara. I mean, his non-napit. I mean, the explanation and that thing. So the deductions. This question related to the deductions. Yeah, the first one actually, the deductions. So one of your previous slide we have mentioned, actually during the previous slide you have mentioned regarding the insurance payment. So if I'm Kumar, if I pay, I mean nearly assume if I pay 300,000 per year annum. So do I mean eligible to reduce, I mean the deduct that insurance payment from this from the deduction part?
Yes, it is mentioned the medical expenditure, including insurance premium. So therefore,
I think he must be asking about life insurance.
Yeah, life insurance. Yes.
Yes, life insurance. Basically, most of the life insurance, as far as my knowledge, so it covers certain medical expenditure, medical expenditure as well. So if it is mentioned there, so you can easily you can deduct that deduction, and at the same time you can in 2020 when the government introduced this expenditure relief. So what we were instructed. We were given the instruction so not to apply this expenditure relief in strict manner. So try to find. So it is in addition to 3 million. Certain expenditure, especially this expenditure, there is for the employees, they don't have area to deduct this certain expenditure. Therefore, we basically, if the life insurance premium, life insurance agreement, so it covers the medical coverage also there. Most of the life insurance we know that medical coverage also included. So then you can deduct that life insurance.
If medical coverage is not included,
then it is a problem. So now, first, initially you can maybe sometimes you can claim that deduction, but in case if the department audit it, so if the department asks you to bring the details of payments and the agreement, then it will be an issue.
Yeah, you mean the total, I mean the installment or the installment that cover the medical the part?
But when you take this is an administration issue, it's a practical issue. When you take the life insurance, so it includes everything, and it is something the premium they design based on the total insurance. But that is why I told you it is. So we were instructed not to apply in the strict manner. So whatever the medical is covered, so our idea to allow that for the as a deduction.
May I allow to ask, I mean, another question, because that is really important to our employee in the university also.
Okay.
Yeah. So the second one is actually that non-cash benefits. So
Okay.
non-cash benefits means actually the benefits we get. I mean the form of non-cash.
Okay.
So this time actually the return of income. I mean the receipts came from the tax office to our the individuals. I mean the individual that the staff member. So there are some members actually, including me. We have noticed that they have included that non-cash benefits even though we didn't receive that one. So I am the one of victim of that one. Then I have informed that thing to the tax office in the University of Peradeniya. Then they say this is mistake. So now they can correct it. So how we can actually get correct? Get the all the payments back.
Now it is like this. Now employment income is not final according to the present act, right? Therefore, so once if you pay more than what you expected to pay, you can ask but you should first you have to get registered in the department. Otherwise, if you don't have registration, so you are not in a position to claim that refund. But if you have a tax file, definitely you can ask the Commissioner General to refund it back to you. So you can calculate your tax liability and excess that you paid. It is because you can claim it as a what do you call tax credit. Then you can ask to refund it. But the best thing that you can do within the next year or within the next payment, as immediately discuss with your the office and ask them to correct it during the subsequent year. So if the subsequent year, if you have tax liability, they can make adjustment, but first they have to inform it to the department, the relevant branch where your file is handled, and discuss with them, and first get the approval from them, and they will provide you the solution how to do the subsequent changes through that related with the previous year.
At the initial discussions, actually, they refused to change this one as they get the the audit queries for their office. So I said I don't agree, but some of the members, actually maybe more than 10 members, actually victimized with this matter. So they didn't know. Actually, some members, the academic members, didn't know this thing. Anyway, I have noticed this one. Then I actually complained this thing to that office. Then they actually gave me another form without sending the original form to the corrected form to the tax office, Internal Revenue Office. They gave me that by deleting that the non-cash benefits amount. So I didn't agree to actually accept that one. Anyway, they say mistakenly they have put that I have received some kind of the property loan. So they said that is mistaken, but that is a mistake. But anyway, they can't correct now because of this. All the amounts are sent to the audit office or whatever thing. Now they can't, as they are getting the audit queries, they can't correct. Is that is that true? Actually, they can't do it. Can they do it?
Actually, so they have to apply. They have to administrate your tax matters according to the guideline given by the Commissioner General. So they can't go beyond that guideline. Maybe it's better to ask them to go to the department and discuss with the department officials how to correct the mistake that they done, and once the department allow you to do it, I think there won't be any issue. Audit query, so you can answer the audit query in the proper manner. I don't think that would be a big problem.
May I allow to actually ask the breakdown of my taxes? All the taxes.
Yes, you can ask the breakdown. It is their responsibility to provide you all the details. First get the breakup of your the receipts. Your payments, and we'll see whether they have deducted the proper amount or whether they have deducted excess amount, additional amount.
Okay, Mr. Silva, thank you so much. Can we, from silence, can I go to the next question? Because
thank you very much. Thank you very much. I stop there.
Mosha.
Hi, I'm a graduate.
Make it short.
Yeah. So I want to know if a person earns in foreign currencies, is there any special criteria applied to when it come to that taxation?
Yes, it's a good question. Now, foreign currency from 2018 to 2019, foreign currency receipts individual in the hands of the individual 15 million, up to 15 million we considered as a special relief, and that means that is given as exempt amount, like you need not to pay taxes if your foreign currency receipt less than 15 million Sri Lankan rupees. But from 2020 January onwards, so entire foreign currency receipts, I don't get it in the wrong way, but you have to provide the foreign currency. Sometimes you get foreign currency, maybe means something that now, for example, you working in the organization in Sri Lanka, and you provide services and everything is provided to the Sri Lankan organization, but your income comes in foreign currency, that not that is not the exempt. That is the concession is not applicable for that in that such type of instance. But for example, if you provide services out of Sri Lanka and your service also consumed out of Sri Lanka, and on top of that service, if the foreigner send you foreign currency, that income 100% exempt from tax, no tax liability. But that foreign currency you have to remit through a bank in Sri Lanka. So in such an instance, so no tax liability fallen, not only for the individuals but also for the companies as well. After 2020, entire foreign source of income, if the currency comes in the foreign by way of foreign currency and it remitted to Sri Lanka, so it has been made exempt.
Thank you very much.
Mr. Silva, can the moderator take on to the next speaker, please? It will be a very short introduction, and the formal vote of thanks will be done at the end.
Okay. Thank you.
Okay, thank you, Mr. Pradeep. So I invite Mr. Samaranayaka. He is the Chief Executive Officer of the Sri Lanka Institute of Taxation, and he has 33 years experience in the Inland Revenue Department, former Commissioner of Inland Revenue, as the head of the Banks and Finance Service Unit. I cordially invite Mr. Samaranayaka to address the audience.
Mr. Samanaka, you can take over. I think you are mute.
Okay. Thank you. Right, my task is to introduce the institute and what is happening in the institute. What are the advantages of the institute after getting the membership, etc. That is my task. Very short period I have been given. So the institute, when you talk about the institute, it is registered under the Company Act in 1992 as under the Company Act, but it was incorporated under the Parliament Act in 2000. And the management, control, and administration of the affairs of the shall be vested in the Executive Council, consist of the President, Vice President, Secretary, and Treasurer, and 7 other members, of whom 3 members shall be appointed by the Ministry of Finance, and 4 members elected by the members of corporation. So it looks like, according to this situation, direct government interfere is there with regard to the activities of the institute. And objective of the corporation is the main objective to create awareness in the field of taxation among the members of the public, etc. There are other objectives as well, but the main objective is to create awareness of the field of taxation among the members of the public. When you come to our course contents, we have 4 levels. I will introduce what is the level, what is the award, what is the duration, and what is the entry qualification. Application level, there is no award, it's a basic course. and the duration is 4 months, and qualification is just A level. It is designed for the A level students, those who have passed out from the A level. Then other level is the analyst 1 level. Again, it is entry level. So qualification is the graduates with the accountant's knowledge. Undergraduate, I think in the management faculty, undergraduates, those who have completed 3rd year with the accounting and taxation subject, and those who have qualified the AAT, chartered, CIMA, SEC, HNDO, similar qualification. Those who have qualification, those qualifications can directly join with the analyst level 1. That means they don't need to follow the basic level. It is assumed these students are having basic knowledge of accounting and taxation. So that is the entry qualification is designed. So after following this course, the certified tax associate award is given. Then it is again 4 months. Then after the analyst level is completed, they will go to the analyst 2 level. Analyst 2 level, no direct recruitment, only very special grade. That means the radical chartered tax advisors of Ministry of Chartered Accountancy. They can join with the analyst 2. Others should come to the analyst 1. In that, after following that level, he will be given the award as certified tax analyst. And finally, it is the 6 months. Finally, it is advisory level. It's the associate tax advisories award. It is a 8-month course. So after following the those 4 courses or 3 courses, depend on situation, the membership is award. It is a professional membership of the institute. In the case of awards, in the case of application level, those who have followed the application level, they have the basic knowledge of calculation of the tax, especially the calculation of the individual tax. At least 1 level, they can do more than that. So they can work as a certified tax associate or as a tax assistant in the companies. In the analyst 2 level, they can work as a tax accountant. So they are having the more qualification, more knowledge on the taxation. After advisory level, they have the statutory qualification with the membership to act for any kind of tax issue with regard to Department of Inland Revenue. Then the application level subjects are the principle of taxation, the business economics, the fundamental of accounting, the business management, and the analyst level 2, analyst level 1, we have direct taxation, indirect taxation, the compliance management. This is compliance management with the what is happening with the Department of Inland Revenue. So when you talk about the taxation, there are 3 parties involved. It is tax policymakers, administrators, and taxpayers. The compliance management is entirely what is practically happening within the department with regard to the administration of the tax law. So it is needed to become a professional tax advisor. So therefore, that subject is included in the analyst 1. So accounting for taxation again included in the analyst level 1. And with regard to the accounting for taxation, those who graduate, those who have specialized in the accounting degrees are eligible to get the exemption. And then analyst level 2, the advanced taxation such as corporate taxation, value-added tax, the tax education, that means the tax dispute decided in the courts, and the compliance audit assurance and corporate law. Those subjects are in the analyst 2. After that, you will go to the advisory level, final level, including international taxation, and those are subjects are there. So all the practical subjects are covered during these courses to get the maximum knowledge for the field of taxation. After you get the membership of the institute, you can use the title called FTII Sri Lanka. And after 5 years, you can get the title ATTI Sri Lanka, and the honorary members can get the FTTI Sri Lanka honorary ATI. Those are statutory. Those are in the Act itself. After getting the membership, so they are eligible to become authorized representative under the Inland Revenue Act. Actually, authorized representative means to act on behalf of the tax matters of the taxpayer. They can directly go to the department on behalf of the taxpayer and discuss with the tax authorities, and they can do whatever taxpayer are supposed to do as an individual capacity. So there are 4 types of categories to get the authorized representative as per Inland Revenue Act. They are the members of the Institute of Chartered Accountants, the attorney at law, and the permanent employee of the institute in the organization, and finally the members of the Sri Lanka Institute of Taxation. So that is the maximum benefit you can get after become the member of the institute. So I went a little bit fast due to the time situation. So any student, anybody is interested, you can ask any question with regard to the courses and related thing. Thank you. There's any question with regard to subjects, levels, qualifications, etc. I think this e-flyer giving those details has been sent to the university. Any student in interest can be collected from the university. I have sent copies of the e-flyer giving those details.
And Mr. Samanayaka, what will be the charges like for these courses?
In the case of basic level, it is 27,000. In the case of second level analyst level, it is 35,000. The third level, it is 55,000. In the final level, it is 68,000. The university students are getting 10% discount if he is having the university identity card for each courses.
And these are conducted only in Colombo?
Actually conducted in Colombo, but at the moment it is online. Anybody can do it. Yeah.
Okay, I think that would be a good news for the students. We'll anyway distribute the flyer and all that. Yes. So in the absence of any questions and the interest of time, on a personal note, thank you so much, Mr. Pradeep Silva and Mr. Samanayaka. I mean, the members, the academy members who were here, they were very much benefited. So as the students, I think. So now we close the sessions, and may I welcome my colleague, Ms. Sumudu, to give a vote of thanks, please.
Thank you very much. On behalf of the Career Guidance Unit, I would like to give our thanks to the resource persons and all participants. So thank you very much. Have a nice day and good night all.
Thank you.
Permitting the both lecturers, if there are any questions, we'll get on the chat box. So we'll I'll personally email to you all and get the answers and continue with them, the dialogue. So okay. We hope to meet you again, and thank you so much, Mr. Samanayaka, giving us the opportunity to join with you, as well as Mr. Pradeep Silva for doing that wonderful lecture. And if there are any queries, I'll always come back to you. Thank you so much.
Okay. Thank you, sir. Thank you.
Thank you. Thank you very much.
Good night.
Good night.